You have a business and you want to scale it up, and the first thing you require is funds. My guest today is Simmi Sareen, and she's going to help us understand and demystify the whole loan process.
Hi Dipika.
Hi Simmi. First of all, tell me a little bit about what you do.
So I am the founder of this platform called Loans for SME, which I started about 2 years ago. But before that, I come from doing credit and lending for about 20 years now.
Okay.
So loans and lending is literally all I've done all my life.
Okay.
And we set up Loans for SME about 2 years ago because we felt that there was a huge divide between entrepreneurs and companies who are looking to grow and who did not have a clue on how to get a loan.
Right.
And all these lenders who are out there looking for good companies to lend to. And we act as a bridge, finding these good companies, and we find them the right debt solutions.
So what would be the difference between loans for SME and a bank, for example?
So we are an alternative lending platform.
Right.
What that means is that we are the exact opposite of what a bank does.
Right.
What a bank typically does is it focuses on two things when it gives you a loan. It focuses on your past track record. So they look at how much profits you've made in the last 3 years. And they look at collateral, which is how much security in the form of, say, a house or a property that you have to offer as security.
Okay.
What Loans for SME does is look at cash flows, not collateral.
Okay.
So we look at how much cash your business can generate so that you can repay this loan. If, say if I give you a 10 lakh loan today,
Right.
you have to repay that 10 lakh with interest at some point of time.
Okay.
So I focus on, does your business generate enough profit to repay this loan? And the two other things which is different is it's forward looking, not backward looking.
Okay.
So you may not be making enough profits today, but what we look at is if we're giving you a 3-year loan, will you make enough profits in the next 3 years to repay this loan?
Okay. Okay. Also, interest rates, etc. I'm assuming there's going to be a little bit of a, because you're not looking at collateral.
It is more expensive.
Right.
So compared to a bank, an unsecured loan and an alternative loan will always be more expensive.
Right.
But the choice you have really as an entrepreneur is because if you don't qualify for a bank loan, is between two forms of funding, debt and equity.
Right.
And no matter how expensive a loan is, equity is always more expensive.
Yeah.
Because when you raise equity, you are diluting. So you are essentially bringing in a shareholder who will take a share of all your future profits.
Right.
Whereas when you take a loan, you pay the interest that you agree on and you repay it on the fixed date, and that's it. There's no involvement in management, there's no board seats, there's no dilution of stake.
All right. So between, let's say, a angel or VC or private equity funding, and between what you do, that would be essentially the difference. You're not giving away, you're not diluting your equity in the company.
Yes, you're not. So a loan is something which has a fixed cost,
Right.
and you pay that cost and you repay that money.
All right. So let me ask you numbers. In the past, ever since you started, how many women have actually come to you for funding?
So I was looking at this yesterday since I thought this will come up. And of the 200 plus companies we have worked with in the last 18 months, only 7% were women founders or women co-founders. And actually if you look at the loans that we've actually closed, which means we actually disbursed a loan, we unfortunately have only one woman founder in our borrowers.
Okay. Oh dear. We spoke about this and I found this a little, this thing. Why do you think that happens?
So let's look at how a loan process works, right? And I think that will probably give you the answer to why this happens. So there are two things you need to do to get a loan. One, you have to kind of prepare yourself. And by I say prepare yourself, you have to look at 3 things. You have to understand, number one, is this the right time for you to take a loan?
Right.
We spoke about debt and equity, and there is a time for both.
Right.
So there are times when you need money because you're not even generating any revenue at all.
Right.
It's your first order, or you need to do R&D.
Right.
That's not the time you take a loan. That's the time you take equity.
Right. Okay.
Right? Because there's no visibility of how much cash this R&D can lead to.
Right.
So that's step one, right?
Right.
You know whether it's time for equity or time for debt.
Right.
Once you know it's time for debt because your business is generating revenues and you can potentially repay a loan, then you figure out how much loan you could need.
Okay.
And you do that by thinking through what do I need the loan from? And most of this would be for working capital.
Right.
And then, you go through your numbers and you see how much working capital you're going to need. And say you need an X rupees of working capital,
Right.
will I make enough profits
To be able to
repay the
repay
loan?
that loan.
So,
Right.
so this is basically how you kind of evaluate whether or not you should take a loan. And the reason I feel we've had too few women come to us is because I think women underestimate their capacity to make profits in business sometimes.
Okay.
Now, the businesses that come to us may not always be generating a huge amount of profit, right? We often even look at businesses who are loss making but will become profitable in the next 6 months. And I found that, like I've had like men founders come in and say, I'm making a loss today, but I'm going to turn profitable, and here are the projections, and we can comfortably take a 5 crore loan.
Okay.
And I sometimes see that confidence maybe a little missing
In the women
when I speak to
founders.
women founders, because they want to kind of put a lens of is this really 120% achievable?
Right.
And I think you should be prudent when you take a loan, because you obviously have to repay it, but you can also be a little optimistic.
Right. No, I completely understand what you're saying. I think women tend to be slightly more conservative. Also, this whole thing of repaying, you want to be 150% sure that you have everything required for you to be able to repay that loan.
And I think that's true for, and that requirement is gender agnostic, right? That's
Right.
true for anyone who takes a loan.
Right.
That it's a loan that will fall due on a certain date, and you are required to repay it, because if you don't repay it, it goes on your credit history, and it actually makes doing business a lot more difficult in future.
So if I come to you, for example, for a loan, what is the paperwork that you would actually look at? What makes me eligible in your view for a loan?
So the paperwork, and let me warn you that lenders, actually all funders, ask for a truckload of paperwork, right? The reason for that is that you are walking into an unknown entity who doesn't know you at all, and they're trying to get information
Right.
on your business,
Right.
on your profits, on your customers,
Right.
to get that element of trust
Right.
that if they give you a loan today, you will repay it.
Right.
So all the paperwork essentially is meant to establish both an intent to repay and a capacity to repay.
Right.
Now, how do you establish intent? You
Right.
do it by looking at what you've done in the past in terms of not just your credit history,
Right.
which is typically your CIBIL score, but also things like, are you making your payments to, say, your landlords on time,
Right.
or you're paying your statutory dues on time,
Okay.
because all of this shows that you're a good payer in general, right?
Okay.
And then there's capacity to repay. So step one, lenders ask for your financials.
Right.
There is obviously the legal requirement for things like KYC, which is your address proofs and PAN cards and all of that stuff. But then they also want to verify what you're saying, because
Right.
lenders tend to be conservative people,
Right.
by looking at your bank statements.
Okay.
And by looking at your tax returns.
Right.
It's very important. I think founders miss that a lot of time, that even if you're taking loan for your business, your personal credit behaviors matter.
Okay.
So lenders will look at not just the business credit record, but also your personal CIBIL. Because if you have been, say, defaulting on credit card loans, or you have kind of not paying your home loan on time,
That affects your
that's a red flag for the lender.
Yeah. Okay. For a lot of women, right, and this is a very basic question, but for a lot of women, sometimes paperwork may be a bit of a problem. In terms of just having the correct paperwork, because everything is so family, and a lot of the stuff is either attached to the husband or whatever. So are there any issues that you face, or are there any issues that lenders face? How do you solve that?
Well, we haven't actually, because essentially most of what we're looking for is business paperwork, not
Right.
personal paperwork,
Right.
right? So even if your personal finances are tied with the family or husband or whatever, we're not to that extent interested in that.
Okay.
We are interested if that affects how your business behaves.
Okay.
So for example, say you keep taking money out of business, then yes, it becomes important. But really for the purpose of a business loan, what matters is your business paperwork. And even if a lot of small businesses don't have a CFO or whatever.
Right.
Most of them have an accountant somewhere.
Right.
Somebody who is filing your tax returns.
Right.
So all it basically needs is, kind of spending half a day
Right.
collecting paper.
Right.
Right?
Right.
And we obviously help founders with that. We sit down with them, explain what exactly they need in terms of paperwork. But I think it's really just a function of, finding your tax returns guy and finding your auditor and finding your accountant and just, putting together a stack of paper. The good thing is that with platforms like ours and a lot of our NBFC partners, you no longer have to print out stacks of paper like you have to with a bank. It's basically you just collect electronic copies of everything that you already potentially have somewhere in your email or your system, and you give it to us, and then whether you're applying to one lender or 20, it can all be used, the same copies can be used for the application.
Okay. I think my final question would be the kind of industries that you've been approached by, especially by women. What kind of industries have approached you? What is it that they've been doing that have approached you for lending?
Okay, so I think it's a whole spectrum really. I would say that it's not that women haven't taken loans or don't take loans, right? In fact, if you look at Indian microfinance industry, 99% borrowers are women.
Okay.
And they typically take loans for cottage industries. Right. The government of India started Stand Up India program, right, where you can get loans up to 10 lakhs of working capital without collateral, and that's only available to women. Right. And that's typically also taken by women who are setting up businesses, typically home-based businesses or, just starting out in the businesses. Right. People who come to us typically have, I don't want to say more serious businesses, not that, like a solar or, a services business is more serious, but because we're alternative lending, right, what that means is that if you have a factory and a shed, you would right, potentially go to a bank. Right. People who would come to us would typically be high growth startups. Okay. And these could be services companies. Right. We've worked with logistics companies, we've worked with skill development companies, the kinds that work with NSDC and Government of India to do skill development in rural India. The one woman founder I was talking about, whom we've given a loan to, is a solar project company. Right. You will actually, and we have examples of people like Hartika Shah at Kinara Capital who have built a very, very successful NBFC. We have, Gayatri Vasudevan, who has built like one of the largest skill development company in the country. So it's not about, what industry you're from. It's about, running serious, scalable businesses that you need funding for.
Right. Thank you so much. I think that was very, very helpful. And personally, I've understood a lot in terms of what I need to do if I need to get to a NBFC for loans. Thank you so much, Simmi, for spending this time with us. And welcome to Shimi's Business.
Thanks for having me.
And for all my viewers, till next time, stay tuned, stay happy and stay focused. If you like this video, don't forget to like and subscribe to our YouTube channel. Do also follow us on Facebook. And to know more about what we do, visit our website. And don't forget to share this video with your friends.